Right, welcome back, guys. Another YouTube video. I know I've been really inconsistent with the uploads, but I'm going to be uploading every week now, so turn on the post notifications. And I'll be doing a NASDAQ series as well. This lesson is going to be on the open, high, low, close, open, low, high, close. This is going to be the anatomy of a candlestick. When we're looking at the open, high, low, close, and open, low, high, close, and open, high, low, close, as short-term traders, as most of you are, our focus is on the weekly and daily candle. And within a single candlestick, there's almost always three trade opportunities in one candle. You've got the low of the candle in the wick below the opening price, right? Going into a key level, running some stops. There is the continuation trade you can catch in the middle of the expansion. And then when we cap end of a candle. Now, usually trade number 3, when we cap a candle here and here, I usually prefer to focus on that on a weekly, because on a daily you don't get that much range to work with here, in my experience, unless you're going to scalp. And I would only do that on NASDAQ. I wouldn't really do that on Forex. But when we're looking at it on a weekly candle, this could literally be your TGIF play. And it could be a whole day's bearishness, right? So it can give you an entire daily bias, just that one little move down on the weekly candle, right? Your goal, though, should be to master one of these first before you move on to others, right? So whichever one works best from you, which you can see from this lesson, which one you see best on the chart, that is the one for you. Do not try and force this one because somebody you see trades this one and they perform well on it. Whichever one you're most comfortable with and the one that you perform and have the highest strike rate with is the one you should continue with for now until you master it. You know it like the back of your hand, and then you can move to the rest. Yeah. Okay, here's an example video I made, a PDF I made a while ago for my group. So some of the examples will be from a while ago, and there's some Discord call outs here as well. So we've got a premium and discount here of GBP CHF. We are still in discount here. We've run some stops out here on a monthly chart, and the market is overall looking bullish. There is also a premium FVG up here as a drawn liquidity, right? So we're going to trade from discount to premium. We also have SMT with Euro CHF. So we're seeing some institutional sponsorship. We're seeing SMT here and SMT here. So likely to move up at least until this premium FVG. Even if you were to short, this would be the level to short, right? So seeing it trade up into this level is very reasonable, right? Moving into Euro CHF, we can see Euro CHF, this is that SMT. Euro CHF takes the low here into the fair value gap, back into GBP CHF. You can see a higher low here, right? So we're seeing relative strength on GBP CHF. The example we're going to be focusing on is this week here. There is your monthly SMT that we saw, the premium monthly FVG as the drawn liquidity. So we're going to focus on this open, low, high, close and look at that three opportunities within this. Here is on a weekly candle what this could look like. Right now there's different weekly profiles we can work with, and if you guys haven't seen that, ICT has a video on his channel regarding weekly profiles from the 2016 mentorship. But here's a classic bi-week example, right? We open up on the week, we trade down, manipulation, creating the low of the week. This is where trade number 1 would come in, right? When you're in the wick of the candle. This could be a Tuesday, classic Tuesday low of the week at a key level, right? Then as the market expands, breaks structure, there's usually a retracement midweek or the next day. That is the second trade opportunity in the middle of the candle. And then when we're capping the weekly range for a TGIF or Thursday high of the week profile, you'll usually see a small range play, right? So that would be the third trade. There's the open, high, low, close. We're going to be looking at the trade in here, the trade in here, and this little scalp that we get here to cap the weekly range. Okay, here's the call out we actually gave, looking for the bullish move on GBP CHF, right? So once we wanted to see trade down into this daily FVG, right? Because this was on the weekend, and what was in mind was the open, low, high, close dynamics, right? The anatomy of a candle, right? So here's that daily CHF. You guys can see that's this right here that we have mapped. So the market opens up. This is the weekly open. We trade down into a key higher time frame key level, right? And this is where the low is going to be made, right? This is the low of the weekly candle. We also have another SMT here. So we had higher time frame SMT, and from higher time frame SMT, we're going to lower time frame SMT, increasing the probabilities, right? And we have a weekly target for this week's candle in this premium fair value gap up here. Just reminding you guys again, this is what we're going to focus on for the bullish weekly expansion, trade number 1, 2, and 3. So here's the weekly open. You can see the market trades down low into the fair value gap here, the key level. Then we see the market trade up higher. This move right here is that first trade opportunity in the wick of the weekly candle. This is your second trade opportunity, and then we cap the range with the premium here, and we'll have a look at this as well. It's a very small scalp, but it is very effective if you know how to trade this. All right, so here's the move on a hourly chart. Right, so the market opens up here on the weekly, engineers a low. Yeah, if you guys have watched my previous videos on YouTube, you know that this is a signature of an institutionally sponsored move where the market engineers a low just above a higher time frame key level to induce buyers. Then they run them out here, and the market then trades from the range low to range high here. We can see there's a CSD here, and the market comes back into that, right? And this is trade number 1 actually, because it's below the weekly open. So here's the opening price. This entry right here and anything on a lower time frame confirmation within here is trade number 1. Right? Now, just like on the weekly chart, we had 3 trade opportunities. On the daily chart, the same exact thing. So this is one daily candle, right? So you can see we fractalized this idea from a weekly, and we're going to look at it now on a daily. So the opening price of the daily candle here, we trade lower. There's trade number 1. Trade number 2 in the retracement here through the CSDOB back below midnight open. And then trade number 3 to cap the daily candles range. All right, that's exactly this. Now, this is the example of how it could look like on a daily candle, right? So just how we had Monday, Tuesday low of the week, Wednesday continuation, Thursday and or Friday capping the weekly range, we can use the same idea here on the daily candle. GBP CHF is a Asian pair, so seeing it make the low in Asia is very likely. If this was Euro USD or GBP USD, a classic buy day would usually happen with a London session low or high. So in this case with GBP CHF, the market accumulates at open, trades lower in Asia. Then it has an expansion. This is trade number 1, has an expansion. Then in London session, we have a continuation trade going below a low into a key level for value gap. That's trade number 2. And then at New York or London close, we see the market cap the daily range with a small, tiny range play. Okay, and here is what it looks like. We open up here, the daily candle. The market accumulates just above the high time frame daily FVG key level. We then run the accumulation and the sell stops here. This is all below the opening price at 17, right? We want to be a buyer below the midnight opening price, but for the open low high close dynamics, this everything under 17 is the wick that you see on the candle. So everything below this 17 opening price here is part of the wick. So this entry here, if you were to take the order block or any lower time frame retracements here, are all part of trade number 1 because it's below the opening price. It's in the wick portion of the candle. And that's personally where I like to buy. That's an ideal move. But if you do not feel comfortable trading it down here, you can always wait for the break in structure and position yourself in the second opportunity, which is in the expansion phase of a candle. And lastly, of course, you have trade number 3. And trade number 3, this is usually a small scalp, and it's always going to be at a higher time frame key level as well. So the previous daily high here, once it gets tagged here, then this is an opportunity. Let's say this being the draw on liquidity and the market trades up to here towards the end of the day, you don't want to be you don't want to short there and look for trade number 3. So trade number 3, just like trade number 1, has to be at an opposing premium or discount array. Here is the call out as well, where we call the exact FVG here and the OB. So back to the weekly range. All of that price action that we saw on the daily chart was just simply this move right here. And you could see on the daily chart, we had opportunity 1, 2, and 3 here. Now we're going into the next day. So this is continuing with the weekly range and looking at the weekly ranges trade number 2 idea here. So we're going to look at this here on a daily perspective. Once again, this is a single daily candle, and simply this move from here to here, again, within a daily chart, has 3 opportunities. The first opportunity being below the open here. You've got a second opportunity in the expansion phase, and then a third opportunity in this move down, right? That third opportunity here on the weekly time frame, remember when we hit that premium weekly target, that is this small range play here, right? So there is buy stops here, sell stops here, the small range play. There's SMT with Euro CHF right there. And then we see the market give that high of the week third trade idea, a small scalp of a range play. I was looking at this live, but unfortunately we didn't manage to get filled here, but you can see the idea plays out itself.